Okay, so let's finish up here with part 3, and I'm going to fully assemble the graphical order flow package here. Now, it's tempting to kind of go through all of this, but I think we're better served here because our focus is on backtesting. If you're interested in all the details in the graphical order flow package, which is what you see here, I'm going to refer you to our website where you can see what's included with it. Now, the one that's probably the most sophisticated, that would take the most amount of time to kind of dig into and understand, is the buy-sell momentum. Now, I've done a series of videos on this, including some relatively recent ones where we've updated on that. And it would help you explain, because when you first look at it, it looks like, oh my God, there's so much going on in there. Here we go through, particularly when we get into this stuff where it's speed of the volume. Some of that can be confusing. So here, this is a resource to work through if you're interested or if you've not been exposed to it. But again, because I'm not trying to make this a GOF, graphical order flow training, I'm just using that for the backtesting purposes. If you want to dig a little bit deeper into what all this is, what are all these lines, what's in the bars? Well, we can spin through some of them very quickly, right? So you see speed of the delta here, and we standard deviations. That's what's triggering the little triangles that are inside the bar. But we have a number of different things. Again, I refer you to that page, but we're looking at delta divergence here, exhaustion prints. Some of this is carried over from our footprint indicator, things that you would see on a footprint chart, exhaustion prints. This just coloring here, diagonal delta imbalances here. You can do them diagonal, horizontal. Again, looking for insight here that you would normally see on a footprint chart. We're giving that to you in a candlestick chart. A lot of detail here. Again, I don't want to get bogged down here. Stacked imbalances, right? You can see a stacked imbalance right here. Oh, unfinished business and unfinished auction, right? If you're not familiar with that, again, resources on the site. Oh, I think that probably covers the majority of it here. But again, what we're trying to do here is backtest, right? Based off of the structure breaks, and then the swing structure. Again, trying to keep it simple. Now, have we made it better, right? Or are we overcomplicated here? Well, additionally, down below, we've got our TDI, which is just a very fancy RSI, right? So the red line, the center line, is the RSI. White line is the signal line, as you would find with any RSI. But then additionally, we have the Bollinger Bands on there, and then there's a secondary. It's like you've got two time frames. So there's a 13 and a 34 RSI, the dots being the RSI. So, but it's momentum, right? So with the TDI, particularly of interest are shark fins, where we get, you can see them here, we color code them, where you get outside of the Bollinger Bands. Particularly of interest if you get outside of the Bollinger Bands above 68 or below 32, right? Often you'll see the market snap back there. Okay, not always, right? But often that's an area, it's just a point of interest. So I've just gone back to Wednesday. Again, if I do the whole week, this will be a 2-hour video. So we'll just look here. This is kind of an unusual day where we had this big rip opening move and then gave it all back, plus some here, the 10 o'clock hour. I can't even remember if it was news related. Now, I will note here, I've added in here, just to save us some time, I've added in our measured move indicator, which is going to draw all the 50s and the golden zones for me with targets, just to speed the process up here. So we can look here and see, oh, break of structure, retrace, 50, golden zone. We can see all of that. So let's just go through it again. Same idea. I've just zeroed us out, so we'll just look at the day. We know we did, what was it, 968 or something on the last day. Okay, well, let's go back to Wednesday, right? It's kind of just randomly pick it. Now we get a little bit of a jumble here because I've got this set to the RTH only. So some of this that you see that's tied to very high volume bars is from the prior day. Some of these measured moves will be tied to that. So this initial little chop here, we'll kind of let that go here. Again, I'm just using RTH to make it quicker here. So the point being, even though there's a couple of breaks of structure here, I'm not going to start here until we get into that, because I would not be doing this RTH. But anyway, so we let this go here. So here's a break of structure to the upside. There is no retracement here that would affect our results as it is. Now we get up here, we get this, and as we come down, here's the break of structure. Now here's the first trade that we might be looking for. Now, do we have it? All right, I can tell you we don't, because we don't get the measured move firing here. So it doesn't quite, well, pardon me. It does make it to the 50. So that's a trade that we would want to take. So here we come to the 50. Swing structure here. Here's the break. Here's the retrace. We come to the 50, and I'll be damned, right? We come 50 to the tick. Well, now, so why is the measured move indicator not showing? Because it's broken, right? It breaks right here. So here, this is the trade that you would have been in with the thought being, oh, okay, we're going to go down, and here's the target down here. So that is definitely a trade we would use in our back testing here. Let me open this up a little bit so that volume gets a little bit more significant. Okay, so we've had this big reversal here. We come back up. Now note, right, we come up here, and there's the right, you see this here, as I mentioned in the last video here. When we get on the other side of the midline, or the 50, 48, 52, you'll see that's when the McGinley will turn. So here's the first trade, right? This would be a short, and it looks like it's definitely going to be a loser. So here's the trade. We pop up here as we come under the McGinley. I'd be in here. Oh, gets up, 16 ticks, but starts to coming back. We're on the other side of the McGinley, so I'm just going to go with a straight loser there. Now here's the swing structure. Now we go up, retrace. Okay, so here's the swing, here's the retrace. Now we're a little bit shy of the 50 here, so that's a bit of a judgment call. Are you taking that trade? Well, you see, you have two things here. So you have from the last swing, just swing to swing, right? And that's what the order flow zigzag is going to show you, is that, oh, while we didn't make the 50 from the lower pivot, because that's what that's tied to, is this swing, right? So if it just for clarity, right, this would be what's marking there, that 50. So we don't quite make that 50, but we certainly make it from this low. We make it to the 786, and we start to go. So are we taking that trade? Well, to be consistent with the backtesting premise that we started with, which was break of structure retrace, yes, we are going to take that. So here, as we come up here, now I get a little acceleration, right? You see the little triangles inside the bar, meaning the speed is picking up here. Now we're not getting a ton of volume here, right? I mean, look, right? You can see this, right? It's often reflected in the volume, right? It's probably a squeeze, as well. Right? We get, oh geez, right? This is just not a graphical program. Okay, right, so then we get here, which is just sideways, right? We're just a little range here, and then ultimately what we do, we come and popped out of a golden zone here. So let's go ahead and take that trade, and there's actually a chance to add here. So if we're in this trade here off of the 786 and we're coming back, my entry would be here. I want to get on the other side of the McGinley. So let's go ahead and do an F12. Did I get that right? F12, yeah. So here we go. All right, so you out? Are you worried? You're essentially getting a reset here, so we don't. You're sitting with your initial stop. Probably no reason to do anything. I don't know that I would panic, but suppose you come down here and we'll just go ahead and we'll take a loser. Now, if you're using some of our fib tools, you're going to know that 50 in golden zone is here. But I don't want to be forgiving here. I want to just say, well, if I'm in that trade and I see this candle, well, again, let's try and be realistic here and not be accommodating to what we see this coming. And I'm going to go ahead and just call that a loser, or a small loser here. We come into that -4 ticks. Okay, well here now we come. Now here's perfect. Swing low, retrace, golden zone. Right, so we're definitely going to take that one. Right, so here coming on the other side, right, so you can see here I've got two candles here, so speed of the volume is picking up here, so we're coming out of a golden zone. I want to take it on the other side of that McGinley. Now here's 1, 2 targets, probably second target, a good spot to take here, because note what happens here. I get a shark fin out in the momentum in the TDI, so that makes me a little bit cautious about carrying on that trade any further. What do? We come back down here and I get another shark fin, but I'm just barely sneak out. What do? Right? Break of structure, retrace, there's the 50 in the golden zone. So yes, we're going to take that trade as well. F12, right? So let's see. I like to wait, right, and see if we're going to pop, if I can get to the other side of the McGinley. So something like right there. Now I got another one here, but let's assume you're not going to, that's what I got here. Opening range high. Oh, that's probably about as much as I'd take, right? If I'm coming into clearly an area of prior resistance, probably go ahead and bank that. What do? Swing, retrace, another 50 to a golden zone. So yes, we're going to take that one. Right, so into the pocket. Note that we hit the 50 as we hit the McGinley, and we get a purple diamond or purple triangle there. That's a no interest, right? You can see down here. Where's all my sellers? If we're gonna retrace here, make a deeper retracement, you wouldn't anticipate that you'd get a no interest fire here. So we'll take that long right there, and there's the next target. We'll go ahead and take with that. Now what happens next is we come back down. Now I get a break of structure. So the next thought would be, oh, break of structure this direction here. Is there a short here? Well, if we tee that up as we would be, as the software is going to be identifying here, are we looking for a short here? Are we? I wouldn't, right? Looking at that below, right now, the swing structure would have me wanting to look for one, but I don't. There's no trigger here. Nothing. I'm on the other side of the McGinley. You know, here it looks like all I've done is just tag the IB again. And so here's the break. Now I'm back here. Now this is the last thing I get. Now one thing you'll notice here, I get a new pivot high here, but it's not a break of structure. Excuse me, because we don't close above. Right, so we do not close. In fact, that's the initial balance, right? That's the first break of the initial balance, and then look at the reaction here. Not to digress on that, but for those of you that know some of the signature trades that we work on, that's one of them, right? Because how do I know it's the first test? Because it's green right here, right? So still version IB. There's the pop through. There's the retrace, right? That's one of our signature trades, but I digress. I won't count that here. So here's break. We're coming back down. Right now I'm above the low. Okay, maybe I want to take that, but I can see there's a golden zone right there. You know, that's kind of a judgment call. If I know that's there, I'm not going to trade right into it, period, right? So I'm going to let that one pass. You can kind of see here, we're coming out of the lunch hour here, the noon hour in New York, and this is, you know, kind of grinding along here. We're just rotation, right? It's just rotation. And now, so in this kind of chop zone, look at the McGinley, right? It's essentially going flat. So there's no particular edge here. Now I do start to get a little bit of a swing structure here where I take out this low and I come back. So I have a swing, I have a retrace, and it's technical. So I get a golden zone. Okay, so how am I looking down here with momentum? Volume is, of course, very low. But this is tradable, right? So we swing, I'm in the golden zone. Yeah, I'd be interested there. So let's go F11 into a short. Because I'm coming down, I've got a candle low. I can take a break here. Here's the big candle. So let's assume I got a piece of that. There's the algo target right there. Look below here, right? So we get a shark fin. Maybe I'm being overly generous there. If I can get this, let's have this come back here. So let's not assume we got out at the target. Let's assume a kickback there. Now here's the next one. Here's break of structure. Right now I break structure right into a golden zone. So certainly, you know, would get your attention, right? So in the context of swing structure here, I'm waiting for the retrace. So I'm certainly not buying that. So I break and then I break again. Right, now here's just a beautiful setup, right? This is just what you're waiting for. So here's the break of structure, right? So here's exactly, like, I can't script this any better, right? It's exactly the setup we're looking for. So break, retrace. So I'm retracing to the 50. It's the 50 of the last swing, and I'm tagging the McGinley, and I get a no interest triangle here. Right, momentum is, you know, kind of middle of the river, so there's not a huge setup benefit here in the TDI, but that's so good technically that you pretty much have no choice. You've got, certainly we're going to take that, right? So in our back testing, that's one definitely we're taking. So let me get that set up. Right, so let's not assume a perfect fill. Let's assume the break. That these are exhaustion prints. So let's say we're going to take that low here. We're come now target, probably decent target here. Just use the measured move target. Swing, retrace to the 50. McGinley, no interest. Here's the momentum coming in. Right, it's not dramatic in the RSI, but note now I'm starting to see divergence here. So do I get another one? Right, pretty good. Now I swing back. Right now I don't take out this high, so yeah, I got to consider that. So here's pivot. I break the 786, but right, I mean I don't know what's coming. All I know is, oh, okay, wait a minute. Now I'm on the other side. I'm on the McGinley's green here. I'm going up here, but I've had a break of structure, and I do not take out this high. So this remains strong. This ends up being, well, this is the weak. This is the strong because we break this here. Now we kick back. You taking that? Well, when I see that bar, yeah, I probably would be. So up here, a couple of dojis. Nope. Here, RSI. We don't quite get a shark fin. We're kind of at the midline. Let's just assume kind of a shitty fill here, and we go, oh, you know, now you're hitting a 50. again, are you going to know? Well, if you're using the measured move, you're going to see this massive stack of 50s and golden zones. So I don't know that I would stick around very long. So let's just use the McGinley and say essentially it's a couple of ticks, a profit, if not a scratch. Okay, well, let's just carry forward here. So swing, retrace. I know that's not going to be a 50. Right, not deep enough here. Swing, retrace. All right, now I break. Okay, here's the setup. Right, so here's the swing. Here's the break of structure. Now here's the first retrace. Now do we get a 50 there? Looks like we might. Yep, we do. All right, so here's the swing. Here's the retrace. Now again, a 50. McGinley. No interest short. Right, there's no interest, right? If we're gonna, I got this will screw us up a little bit because of the volume at the end of the day, right? So here's this big pump of volume here. We get 3 standard deviations, right? So up, right? And then there's no follow through. Look at we only get 1 bar here. That's what creates the swing. It goes just far enough to go 2 times the ATR, and then it rolls right over. So yes, that's a trade we're gonna take. So let's take our F11. Oh, let's take. So I'd probably take something along those lines here. Now, are you getting the whole thing? Probably not. It starts to come back at you here. I'm probably scratched minus a couple of ticks. What do I got? Minus 1 tick there. Again, not trying to be, overly. I mean, I'm not going to say, oh, we'll get out right at the low, even though there's divergence there. It's easy to do that in hindsight, but I would probably want to see what happens. And here, I'm definitely out. Okay, so here we go swing, retrace. Now remember here, this is part of a short sequence here because here's the last break of structure. I break, now I come back. So I'd be looking again. Now I would draw that. So I would do it, right? I would want to check from the high, right? How do we look here? Yes, definitely in the pocket, right? So I would look there as well. So in an F11 here, big red bar here, breaking below the McGinley. I'd probably be in somewhere like that. Now market starts to come back. No, again, I'd probably scratch that. Here's the last swing here. Now this goes up here. It looks like that's a break of structure, but that is not the break of structure because we do not close above it. The break doesn't occur until over here. So even though we get a deep retracement here, we are still within a seller's swing structure here because we don't close. But I do get, it's hard to see because of the 4 o'clock bar. It distorts the volume. But okay, well now look, it's 10 minutes of 4. You taking that trade? Maybe, probably not, right? I don't like to trade in the last 5-10 minutes, right? It gets kind of squirrely. You see, we bounce, we go, but we go golden zone to break of structure, and then to the end of the day. So let's just go ahead and call that a day right there. Okay, how did we do? So we had 10 trades. That's kind of a lot of trades, but we're taking everything, right? So 10 trades. How did we do? So we're at 1,000 on this day, trading 1 lots. That includes commission. What's our win rate? 60%. Profit factor 925. That's excellent. Average winner 198. Average loser 32. Largest winner 371. Largest, pardon me. Average loser, is that average? Shit. Biggest loss 53. Right. So a lot of break evens. Nothing. I don't think we hit. We didn't have a full stop out. Right. So pretty good day. So the days that we've done, we're averaging about 1,000 with this. Right now. Okay, that's not bad, right? That's, we can feel like, okay, we're on the right track, right? You can certainly feel like, okay, I've done 2 days of backtesting. I've done $1,000 each after fees. Okay, we're on the right track. Now, again, the point is not that this is the magic template, right? Or the magic formula. This is a template, a well-grounded technical approach to the market based on what you're seeing here. And there's a lot of nuance here, and I'm skipping over a lot because this is not necessarily about the graphical order flow package. I had to pick something. So that's one that has gotten some recent updates here, and I think is an underappreciated template. So I thought I'd just use it. Just in case you're wondering, these rectangles that you see on the chart, those are tied to volume. So whenever we have a bar, right, a 1 minute bar that has volume that's 3 times the standard deviation of the last, right, you set it, right? I think it's set to 5 bars. Well, that we note that here and we draw that over. So we know there's a lot of sellers here. Well, you'll find. Here, let me go ahead and get everything out of there here, and we'll just wrap up on this. So I've taken all the trades off. You'll find that often they're much like order blocks, right? If you think about market structure, we're way back where we started this series. So what I can see here is that a lot of sellers came in here, right? And more of them came in here. But so this is the very high volume on the low, right? 3 standard deviations here. Whenever you see a white bar, we're going to draw the rectangle over the candle. It's actually the selling bar, right? Is the selling bar. If I do this, right? It's this bar here. It's the selling bar here, where all that volume comes in, right as we come into that measured move target. Remember, this is swing, golden zone, target, retrace, golden zone here. So you're noticing here that these often act like support and resistance, order blocks, demand zones, call them what you will, right? In SMC speak, it'd be an order block, right? It's because we have high volume here, right? So potential that we come out of here pretty quickly. If we come back to it, there could be some resistance, right? You'll see, right? It comes back to it. Here we stay within the range of these high volume candles. So it's just a different approach to looking for where support and resistance will be, or supply and demand, right? That's a better way to say it, right? We know there's a lot of supply here, a lot of supply here, right? So purple, it means it's selling, right? This blue, right, it means it's buying, right? So here's, well, that's the closing bar, right? Let's see if I can find another one during the day. Here's one, right? With these 2 bars here, right? So big back to back, two white bars here. So this is a lot of demand here, and you see back tested, goes back again, tested. It's much like an order block or a demand zone. Same idea, right? We know, we can just look at it, right? But it draws it across the chart so that you don't lose track of it. Where was that high volume? So you see it, right? Look at, can't get it. It wicks through just a little bit back, and then eventually they get through it, right? So here's that selling volume here. They tried, rejected, and they try again. Look what it took to do it. What's the kickback? Right to a 50, right? We looked at that. Okay, so that should probably give you enough to get started. And again, I would encourage you to go through this, and maybe you like that process that I did here, where we just kind of strip them bare and then you continue to add components. Is it making better, worse? Are your results changing? You got to kind of do that work yourself. But I think that hopefully this gives you some ideas about how you might approach this. And when you're putting together a template, whether it's one of our pre-assembled pro packages like the graphical order flow, or something that you put together based on a series of tools that you've invested in that you like, it's the same ideas. Test it. That's the whole point. Test it, right? And don't be overly generous to yourself. And if anything, try and do as I did, to say, oh, I'm not going to get the tick low, I'm not going to get a perfect entry, I'm going to have slippage, right? Be sure to include costs. I think nothing but good will come from that. I'll say it that way. Okay, guys. All right. Happy back testing. I hope you will take advantage of that. Remember, we do have this little promotion going on this weekend, so it might be a way to ease into some of these tools at better cost, and you can always just trial the back tester and see if you get good results, and that might make it affect your decision as whether you're going to invest in, because we got a whole lot of tools. Okay, guys. Have a great weekend, and we'll be back to you next time.